a strong set of figures, obviously. We are growing 12.5% on a like-for-like basis for the first half of the year. So it's a very good continuous momentum, which had started in Q1 and continues in Q2. And obviously, when you have, such volumes growth, that falls down, in the P&L. And so we have a strong set of financial performance figures. The EBITDA is now reaching 24.8%, which is really a good number. And so is our net income, which is increasing 30%, and our free cash flow as well. So all good for now.
And yet one of the brokers, they're curmudgeons, those brokers, says implied organic growth stacks decelerated by circa 200 basis points quarter on quarter versus the first quarter. Expects your shares to be under a bit of pressure this morning, Gilles. How do you respond to that?
Well, that's a different viewpoint. We are confident in our results. Actually, the volume growth was 9.3%, so it's actually fully in line with Q1. So I don't know what this broker is taking his figures from. And we have obviously, a very strong, basically results on the fragrance side with 15%, which is the continuous again on Q1 with fine fragrance, which continues to grow very strongly. We are now 70% bigger than 2019, which was the baseline before COVID. But you have all the other parts of the business which are growing strongly as well.
Yeah. Gilles, just that flavors division then, I mean, what is that sort of attested to, some of the weakness in parts of that? What is that attested to?
Well, it's relative weakness because obviously we are growing close to 10%. So last year we had a volume decline overall. So it's a very strong recovery in 24. I would say that, the food and beverage market, when you see the results of our clients, is a bit of a mild sort of growth, not as strong as on the fragrance side, obviously. But the way we, do and look into the future is really to develop solutions which are very much on the front of health, making food healthy, diet food and all of that. And that's really a segment which is going to grow into the future.
Yeah, just looking at input costs as well. I mean, there's that uptake there continues for you. How do you see that faring then for the remainder of the year? Do you have to push that price pressure on to consumers as well?
Well, the raw mats, input, pressure was very high 2 years ago. So we actually, deployed all the price increase to our clients, actually in the same way they did push price increases to the consumers. And that's actually one of the reasons, especially on the food and beverage, that actually put volume, under pressure because consumers could not afford anymore the price increase that, brands would deploy. But as it relates to us, the raw mats have stopped, last year increasing. So, but yet we have a difference in terms of raw mats, which are increasing, especially on the natural side, putting pressure on the margins for food, but being softer on the fragrance side. So it's a bit of a contrasted pictures between the two divisions.